Okay, welcome everybody. Happy Monday. It is April 11th, 2022, and we're going to get started here with our pre-market analysis for the S&P 500 futures market as usual. Really quickly want to go back to look at Friday here. Friday morning we called out basically right out of the open, coming up into the back end of our fast moving average here. Called a trade right at the open, of course, calling it the most aggressive thing you could do. But then on the second test, coming up, retesting all the overnight support here, right around 44.91.75, called another short. And again, urge everyone to look for a push down into 44.81 and then down into 74. And then we had a final target down here at 44.69. And you can see that I went ahead, I called another short off the fast moving average a little bit after the open here, and then made a final call to get short down off the fast moving average over here. And you can see I went ahead and called and took some more shorts right down into our first expected support down here at 44.69, and then added another one here. And of course, my final add was right when the whole thing kind of found the bottom and started to go sideways there. So that was kind of the morning, the first half hour. And then after that, it was kind of basically hit or miss on the trades. So if you didn't capture the whole sell-off right out of the open, there wasn't anything else too sexy to take other than this pullback to get long right off of 50% of the previous day, which then led to a nice breakout to the upside. But we did basically stay sideways and chop around for the rest of the day and chopped around within the last 2 days of price action. Coming into Sunday's Globex session, you can see we still have not broken out from the range that we've had for the last few days of last week. And we are playing around now over here between 44, 45, 50, should sound familiar, and our highs up here around 44.74. So let's go ahead and jump up. We're going to do our higher time frame analysis. Because we haven't really moved outside of, again, if I zoom out here and we look at the last, let's say, 1, 2, 3 days of last week's price action, since we haven't broken out from there, probably not too much new stuff going on, but let's go ahead and take a look. My annual chart, again, just hovering right around 50% of this year's range right now. And on our quarterly chart or 3-month chart, again, it doesn't look very different from the way it looked, just a few weeks ago. So nothing new to say up on these ultra high time frames. When we get down into our monthly, basically the same thing, right? Because it's been about a week and a half that we've been trading on this new monthly bar, and the range hasn't really changed from where this candle opened. So there's nothing new to say on these higher time frames. And then on our weekly here, basically the same situation. Here's last week's candle, obviously looking really bearish, following through with the bearish divergence that we called back at the beginning of April there. And as we pull back, the main thing that sticks out to me is this support that we've been watching from 44.1150, this major swing back from the highs of the week of March that closed March 4th. So that major swing, remember we had a zone 44.06 to 44.1150 there. That still looks really ripe for a test if we continue to pull back here. And then that next major relevant level all the way down here around 43, what's that high? 43.2675. So those are the two major levels or targets to the downside that I'm seeing here from the weekly perspective. Outside of that, nothing new to add to the picture as far as any type of major divergence formation or anything important to point out about a candlestick. So again, the weekly not really showing us anything new. And you can see that we're still trading within the previous weekly range right now. Like I said, we're still somewhat sideways. So let's get down into our daily. And last week we did say off the lows, I believe, of Thursday, that we did have an argument for a bullish divergence. You can see if you zoom in and look at what actually happened, the bulls did try to push and break out from that previous daily bar, but it was literally a peak above and fail. And I want to talk about where we failed here, I believe, on Friday. So let's go down into, we might have to look at the perspective from the 4 hour. Yeah, so we'll look at the 4 hour here. So that high that we made on Friday was essentially a test of the 50% retracement of this leg. So remember, going into Friday's market, let's pretend like we were not here, or we were just coming in on Friday. We talked about how we were just pushing up into the 50% retracement of this major leg, starting with the sell-off on April 5th, the highs of April 5th down to the lows of, I believe, Friday, or of Thursday. So holding 50%, I think I said on Friday's pre-market, if it held from there, that was a clue that we would continue to push lower. And from that high, we never came back and broke through. And as you can see, we've now come down and we're testing the lows of last week, right? So not getting through 50% of this major leg right here is somewhat of a clue that we're going to go ahead and come down, break the low at 44.50, and go ahead and come down and test some of these major levels below us. Of course, anything's possible. I'm not sitting here telling you that there's a higher likelihood that that's going to happen compared to a possible bounce out of here. I'm just saying from the perspective of Fibonacci retracements, holding 50% of a leg and pushing back to retrace typically will lead to a breakdown, at least to the 27 extension. And the 27 extension happens to be that first major zone that I just talked about a couple minutes ago. Remember I said 44.0650 up to that 44.11 swing high right there. That shaded zone happens to be exactly a 27% extension of this major leg that we've been talking about here for the last few minutes. So just keep that in mind. That's kind of the perspective from a little bit of a zoomed out view. And again, that little zone down there, I'm going to have to extend this shaded region out. That's going to be a target to the downside if the bears do break through the lows of last week, which were again 44 half. So let me extend this out to the 12th, and it might even be relevant beyond that if we don't come down and test that this morning. So we've got that in there. And let's go ahead and jump into the 60-minute and take a look at the levels we're going to deal with this morning. Not only within the range that we're dealing with right here, but if we break out to either side. So let's go ahead and jump into our 60-minute here and zoom in so we can see what we're dealing with in this little zone right here. So right now we do have a multiple time frame bullish signal from the overnight low, which happens to be just a few ticks in front of our minor eye level here at 44.45 half. So it looks like there's an argument that we could see an attempt by the bulls here to go ahead and chug higher. Remember that first thing we need to see is a breakthrough this previous 1 hour bar, and that high is 44.5750. So if that 57.50 breaks right there, then I think we could probably expect a test of our first shaded region up top here. Now keep in mind, we're pushing back up into 3 days worth of price action here with a lot of chop. So it is one of those situations where there's just a whole lot of levels that we're pushing back up into. But that is just what it is. So we've got this little zone here, 44.6650 up to the previous daily low at 44.6875. That to me looks like a very relevant level if the bulls do go ahead and push through that 57.50 here this morning, especially because you can see a major swing right here that really hasn't come up and been cleanly tested. And it is again our famous orange power level and our previous daily low right there. So that would be my first target to the upside if the bulls do get that strength off the overnight low. And any further than that, it's going to bring us right up into the 38% retracement of the smaller push down here, this smaller leg from the highs of Friday down to the overnight low. And that 38% retracement is our eye level to the tick at 44.7450, and then right up into 44.77. These are our two minor eye levels right here. That would be our next expected resistance zone. Again, keeping in mind that it's a pretty choppy little region that we're pushing up into. And then further from there, it's going to go right up to 50% of the whole leg down, which happens to be basically almost exactly the close of Friday. So coming back up to fill that gap to fill the close is also something that we see happen pretty often. And then from there, if the bulls continue to chug through there, and notice not only is that level the close from Friday and 50% of the whole sell-off, but it's also basically this major swing high from the overnight session. And so getting through that also is a good clue that we're going to come up right into this ledge that basically was the ledge that we sold from on Friday's open. So if you remember back to the beginning of the pre-market, if you can, remember I said when we came into Friday morning, I called shorts off of 91. I might be mixing up 43 and 44, I don't know. But 44.91 was that little area that we were using as a platform there. So coming up into 44.91.75, being that really strong support for, I don't know what this is, maybe 5 or 6 hours of the overnight session going into Friday of last week, that is our 61.8 retracement. So now we have our 61.8 lining up with very strong support, and then we have the 50% of the previous day, all sitting there at 44.91.75 to 44.94 quarter there. So that would be that next pocket I would expect to see potential resistance at, and then a little bit further from there, which is going to bring us right up into 45.13, and then the highs from Friday. So those are the little pockets I'm expecting to see resistance if the bulls do just get really strong here. And let me just highlight the previous daily high and that major retracement right there at 44.17 quarter. Again, that 17 quarter was the retracement level we were expecting to be resistance on Friday and Thursday. And you can see on Thursday it was the high of the day, I believe. Let's see if we scroll all the way back. Yeah, so the high of the day was that retracement level. And you can see it right here, 50% of the whole sell-off. And then you can see on Friday that little peek through it and the failure, right? So coming back up there, you never know. There could be some type of trouble for the bulls once again. Any further than that, and we're right up to our next expected resistance level, which we never tested from last week. So if we do come back up, it is a little bit of a range, but it is what it is. Like I said, this whole area is kind of choppy in here. We've got 45.27 to that 45.33 area. I'm going to expand this out to cover the last few days and get that up there. So if we do end up breaking through the previous weekly high, previous daily high, we got to come up and get through 27 to 33 before I really have any faith in a bullish kind of breakout from the zones that we're in right now. So that's what we're looking at above us. We're right around 44.50 right now. That would bring us up about what, over 100 points, or actually we're down here, sorry. So let's see what else we have above us, because I think we have a little bit more room, because let's say a 70-point push higher is something that we could probably do in the matter of a few minutes or within an hour or two in this kind of market. So if the bulls do end up getting through that pocket, which is really the most important level I want to see the bulls get through this morning, we're right up into all the levels that we've been basically mapped out at the end of last week that haven't been tested. So those all still are basically the same. We've got the little pocket from about 44 to 46 here. So let me expand that one out to cover the next 2 days. And then if they jump through there, it's that pocket again right around 50, say 53 to 55. Get that expanded out. And then any further, right into 45, basically 65 to 66 right there. Any further from that, and then we're right back into this little shaded zone here. So update that. So that'll be 72.50 to 74.50. And I think that's probably good enough for the upside here. So I don't expect there to be some type of major bullish breakout to new all-time highs or anything, but those are the few pockets we're looking at above us. And like I said, we do have a good argument for a bullish divergence from our overnight low. So some type of bullish attempt out is definitely an expectation. I just don't know if the strength is going to be there to go ahead and get through this major 27 to 31 area. On the other side of things here, so if the bears do end up holding off of one of these levels, or even from where we are right now, and we continue to break through that 45.50 eye level, and remember last week's low is 44.5 or 44.50, just 1 point below that. If that breaks, that first target to the downside is really into 44.0650 to 44.11 quarter. That's that major pocket that I've been mentioning for basically the whole pre-market here. Keep in mind we do have 44.31 quarter in the way. You never know if that's going to be a problem because it is one of those minor structure zones. But I'm really looking at that 11 to 06. And same thing, we do have 15 quarter in the way. So 31 quarter and 15 quarter are there. They can't be ignored. But I'm really targeting that little pocket in here. Any further than 0650 is going to bring us right back to the 4400 area. And again, all these levels down below us, we've already mapped out, I believe, for the last few weeks because we haven't really been down to test these areas yet. So let me go ahead and expand this one out. We've got again, the pocket around 43.95 to about 4400 there. And then a little bit further at 43.81. And then we're down into that major swing at 43.6750. That's going to be basically another 100 points to the downside. And if that breaks at 67, we've got a minor eye level at 61 and a minor eye level at 43.48. Anything deeper than that, this pocket right here is a very important little zone that I would be targeting if basically from a larger perspective, I'm targeting 06 to 11, 4400, 4367, and then this 4324.50 to 4326.50 zone. We have the minor eye levels in between. So again, these are good areas to take profit with some of your position. So let me expand this little pocket out as well. And then I think that'll be it for Monday's pre-market. So get that one in there. And that's it. That's what we're looking at here. Let's zoom out and kind of put it all together. We've got a good bullish divergence from the overnight low, so an expectation of an attempt to bounce out of here is definitely there. If the bulls do bounce out, first things first, we got to get through our orange power level and the previous daily low. If they can get through there, we've got 44.74 to 77, 44.83 area, and 44.91 to 94 area. On the other side of things, and remember, getting through that 44.94 area is 50% of the previous day. So as these levels break, we get more and more faith in a potential major bullish reversal. getting through 50% of the previous day even stronger. And then finally, the previous daily high up here and this pocket 27 to 34 to 33 will be important. On the flip side of things, if things break and we start to sell off, we're looking at a potential hold at 31 and 15, but the larger target down into 06 to 11 and 4400. So have a great day. We'll be back here on Thursday to take a look and see what important levels we want to target at the end of the week. Hope you guys have a great trading morning, and I will see you then. So take care.